I was reading an article about the EMI income imbalance in India that is pushing people to more loans and harassment. And this kind of made me reflect. First, read the summary of the article and then understand what it means and how to stay educated on basic finance. A recent survey of 10,000 people across India has revealed that many borrowers are struggling to manage their loan repayments because their monthly EMI take up too much of their income. This imbalance between what people earn and what they have to pay each month is pushing them to borrow more and in many cases face aggressive tactics from loan recovery agents. According to the findings, most people in financial distress are paying more than 40% of their monthly income towards EMI, far above what is considered manageable. This means many families have too little left for basic needs like food, utilities, transport, or children's education. Because basic expenses eat up most of their money, many borrowers fall into a cycle of taking new loans or use credit cards to cover costs. Some are even forced to borrow more from friends and family. The survey shows that about 65% of these borrowers have cut essential expenses, including delaying medical treatment or cancelling insurance, just to keep up with loan payments. Others have taken salary advances or sold assets like gold or property to cope. There's a huge problem of harassment by loan collectors. Alarmingly, many borrowers report being harassed by recovery agents when they are unable to pay on time. 72% said they experienced some sort of harassment, and 67% received repeated phone calls, often including threatening or abusive messages. The calls and messages sometimes come at inconvenient times, like early morning or late evening, outside the hours that lenders are supposed to contact borrowers. Recovery agents have also been reported to contact borrowers' family members, neighbors, or even their workplaces, which adds pressures and embarrassment for the borrowers. The buy now pay later (BNPL) instant loan apps and personal loan EMIs are a significant source of loan distress. The report was based on a survey of 10,000 financially distressed borrowers conducted from June to December 2025 across the country, including in Bangalore and Tier 2 cities and semi-urban areas. While banks, 45%, and non-banking financial companies, about 40%, remain major lending sources, digital lending apps account for about 15%. Despite repeated advisories, regulatory action by the Reserve Bank of India, many borrowers continue to fall into illegal lending traps because urgency often overrides caution. Medical emergencies, job losses, or short-term cash flow gaps push people towards apps promising instant paperless loans and quote, no credit checks, especially when banks or NBFCs turn them away. BNPL products worsen the problems by breaking spending into small installments, making debt appear manageable while quietly piling up until repayment becomes unworkable. Once trapped, borrowers often face harassment, data misuse, and intimidation practices that are illegal. Consumers must be encouraged to verify whether lender is RBI regulated, understand the true cost of borrowing. So, what can consumers do? Consumers must be encouraged to verify whether a lender is RBI regulated, understand the true cost of borrowing, and avoid platforms that demand unnecessary permissions or access to personal contact. The other thing to keep in mind is to stay educated and updated on the common guidelines on risk tolerance and on debt to income ratio, DTI. Now, according to experts, the DTI of 35 to 36% is an ideal looking one, which is highly recommended, and the best rates and approvals are granted for people with this DTI. Now, 36 to 45% puts you at a risky zone. 45 to 50% puts you at a high risk bracket. It's allowed for some loans, but at more than 50%, you are at a very high risk and you need to take action. So stay aware of your rights. And like the old saying goes, neither a lender nor a borrower be.